Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Now, I know I've been away for a few days, haven't got you a video for a few days, but down in Florida celebrating the U.S. Thanksgiving holiday with the family. But never away from the markets. I'm always dialed in, and you got to be. There's never a dull moment. I mean, just look at what we saw here on Friday through Monday and Tuesday through today. The volatility just has been something else. I mean, just ricocheting back and forth, trading to a new low here before the close in the S&P, and then ripping back up. So before I get to it, please subscribe to us on YouTube. If you're watching it on YouTube right now, click that button right there. It's right there. We'd love you to follow us. If you're watching from our website, click the subscribe button that's below this video, direct you to YouTube, and subscribe to us there. We'd love for you to follow us. We'd love for you to help us build our following. And yes, if you are a client, you get it via email, but it does get posted on YouTube first, and there is a lag time sometimes between YouTube posting and when it goes out via email. And this way, you get this information as soon as possible. Set your notifications to get it. We'd love for you to follow us, so please do it. Now, let's get to it here. Another day. I mean, there's no dull moment in this market. Like I said, it's volatility been in and day out, really. And we've had different technical patterns I've highlighted on the Morning Express. You have a rising microphone, then you have a head and shoulders breakdown. Now you have this rejection off supports. Where are we? Where is this market going? 45.50. The S&P traded into there here into the close. 45.57 was the low. Rare major 4-star support we have. 45.35 to 45.50. It barely almost got there and then ripped higher. We could see it overnight. I don't think this is necessarily the low. Volatility could easily continue here. But what I do know is there is a tremendous amount of support right here. 45.35, the previous all-time high in the front month contract, to this 382 retracement from the new all-time high down to the September low. And the market traded into that and responded. But it's not only that. You got the rising 50-day moving average. Remember how important this 50-day moving average was going into that September quad witching? It's still going to be very important. So that's trading about 45.30. And then you got the midpoint from the September low to the new all-time high. That's just above 4,500. And then don't forget, too, remember there was a ceiling there, 44.70, that this market pinged off a few times before really selling off in September. The breakout really got going when it got above 44.70. So from here to 100 points lower, you got a lot of support to lean into in the S&P. If you're investing, you really lean into that. I really love it. I think we're going to close very strong out, finish the year out very strong. And if you're trading, you got the levels to trade against. I really like leaning into this. Same thing with the NASDAQ. Very similar levels. You got the 50-day moving average below. You got previous all-time highs, 15,700. A lot of support retracement-wise. Volume pockets, 15,850. A lot of support to lean into here in the NASDAQ too. Closed fairly strong, held 16,000 in the NASDAQ. But, at the end of the day, why is this volatility here? Overnight, Moderna's CEO said the vaccines may not work. Listen, I think this is becoming really gimmicky at this point. I mean, you got the World Health Organization coming out and reinstalling fear. And if they're not reinstalling fear, then they're going to become irrelevant. That's their fear. You have protests across Europe. They're protesting restrictions, protesting lockdowns. The World Health Organization is trying to regain control and reinstall fear, and they're working with Big Pharma to do it. It's blatantly clear here right now. So. But the market worked higher. The market worked higher into right after the open. It digested this overnight, and I thought this thing was ready to turn higher, and it did. The NASDAQ turned positive, traded up to a new high in the session from yesterday's close, and but it was Powell. Fed Chair Powell brought a new narrative, and no one was really expecting it. I certainly wasn't. We had the end of October, the early November Fed meeting. They were extremely dovish. They barely introduced a taper at all. It was a net zero taper is what we called it, because the U.S. Treasury is issuing less debt too. So they're buying less, and then the Treasury is issuing less. There was barely a taper. The MBS was tapered. But at the end of the day, they were extremely dovish. And now what's changed? I mean, obviously, Fed Chair Powell was very hawkish today, and that is why the markets turned sharply lower. The NASDAQ actually led lower, and the Russell really kind of held into that overnight selling and responded and finished pretty decent on the session around 2,200 relative to that overnight level. It was the NASDAQ that dumped because you saw rates tick up after Powell turning hawkish. What was it though? He said transitory inflation could no longer be called transitory. He's implying that it's here to stay for a bit longer. He said it may moderate moderate in the second half of the year. But on top of that, he really was pointing to the fact that they're going to reevaluate this taper in December. So where did this now come from? We've heard this before, but it's always Powell holding a more dovish tone. He's now been appointed to a new Fed role, the new Fed chair for reappointment. The fact that he's got the job now, maybe, he doesn't have to act political. He's going to be more honest. And we've all known this. Everybody's known that the Fed should be more hawkish. It's just now it becomes a surprise, because not only is it a surprise because they haven't been hawkish like this really more recently, but more so because you have this new variant, and it's more reason for them to dial back the hawkishness or really become dovish in any sense. But at the end of the day, this is what we have to deal with. This is the market we have, and like I said, there's a lot of support to lean into in the S&P. We like the S&P. We think we can finish the year with new all-time highs, and we got to see a constructive path with this support levels holding. So that's where we are in the S&P and the Nasdaq. Now, crude has had one heck of a bloodbath. It's trading into the 200-day moving average, traded below the 200-day moving average, but guess what? It rebounded very, very well into the close, and what were we seeing? About almost basically $67 in crude oil front month, rebounding very, very well. Now we're going into, we have inventory data coming up. We also have the OPEC meeting coming up, and then the White House is continuing to say that they're going to release SPR. Now, OPEC, they really don't have a reason to change bringing back the 400,000 barrels per day, but they could surprise markets. I have a gut feeling that they're not extremely happy that the U.S. is going behind their back. They've got Japan, South Korea, and others that are going to release the reserves. The OPEC really likes controlling the price, and they liked this a lot. And I think Russia did too. You saw Putin had a lot to say this morning. Nothing bad necessarily, but there is definitely some friction in Eastern Europe that you got to pay attention to. But Putin was talking this morning, and I would really not be surprised to see them delay some production coming back on and see the crude oil market really rip higher, and really just to stick it to the White House for going behind their back. So pay attention. There's going to be a lot of volatility in crude oil going forward, but there's a lot of resistance overhead. We're going to highlight new resistance levels tomorrow morning. But overall, what you want to look at, today's high, 71 bucks. It's going to be a tough one to get through, $70 to $71. That reversal high, it aligns with a lot of reversal yesterday too, but thick resistance, $70 to $73. It's going to be really tough to get through. But if it can get through 73, gets above 73 bucks, you're going to see crude oil just rip higher, I think, at some point in the next couple of weeks if it can get through there. So we like crude oil. The CME has done a really great job with giving these micro contracts. You can really layer into positions. It's something to think about here at the Micro Crude. Give our trade desk a call. We're here to help walk you through how to do that. So we like crude oil. Be careful out there. Volatility is going to stay. We've seen what 10% moves for more than 10% moves for 2 days out of the last three, but in the one in the middle being even almost more volatile in some sense. So a lot of volatility to stay. Call our trade desk if you want help with talk through some of this. Now, gold and silver, I'll try and wrap it up here. Gold reversed sharply, traded out to 1811. Then Powell brought in the hawkishness, and the gold sold off. Gold not only sold off in reverse, but it traded below 1780. We finished below 1780. This is a breakdown of the trend line, and you see something like this, it tells you there's more downside. But wait, silver really didn't make new lows. So you're seeing silver led to the downside for the last couple sessions, but silver didn't sell off more. It started to tell me that if it can't go lower in this sort of environment where the dollar was ripping and gold selling off, then maybe all the sellers have already sold. I'm starting to like silver again. You probably, if you're reading my stuff, you know that I wasn't bullish. I took us completely neutral in our research from a trading perspective. I've talked about it. I was trading from the short side, but what I like now is I am starting to like getting some longer term call spread, call exposure in silver. I think we could see some upside, and not to mention very seasonally bullish time of year in this back half of December. So look for silver and gold potentially here to find their bottom. Silver maybe being the one that could lead to the upside if we see more of a growth expansion sort of rally in the metals. Silver could lead gold very well. But listen, I've already given you a lot. Morning Express coming out tomorrow morning. Our trade desk is here. Don't hesitate to call us, 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.